Hello, welcome to Alpha Futures Trading. This is Dom. As per my recent last video, I want to share with you what I've been using and looking at to establish a strategy and a plan, daily plan, when it comes to daily trading. So as I mentioned, I've been daily trading since 2010. I spent probably the initial couple of years to really try to make some sense of it, do some research, try to understand what to do, what not to do, what to look at, what people were doing, going in wrong avenues and starting again and trying something else and then failing and then, wasting money. And so it is a bit of a journey. It's a rocky journey. It's not easy. It's loads of material, loads of stuff which clearly are just meant to take your money. So it's part of the reason why I wanted to share this. So while it's not a unique only solution, it's certainly something that is here to help you to look at relevant material, relevant in the sense that they're relevant to the way the market operates and function, more than being a unique strategy. Of course, if you've got your unique strategy and it works, well, stick to it. If you've got something that partly works or parts that work, then use those parts and combine them and make this your own. I think that's the key, really, something that speaks volume to you and that works and you feel comfortable with and that you understand and you're ready to make a plan. So really that's the idea behind what I'm sharing here. As I mentioned, I'm still every now and then, less so now, but I do some one-to-one training, some people and some group training. I do that, but really here is just to share free content and at least to help you do your own research, but going certainly in the directions that is proven to work. Now, as I mentioned earlier in the introduction video, and maybe in some of the other videos that you may have watched, the order flow is just looking at the transactional flow between the buyers and the sellers. And of course, the buyers and the sellers are what make the market and the price, if you like, move up or down. And if prices move up and down, this is when we as day trader, unless we're trading options or we have a more sophisticated hedging strategy, but as a day trader, directional trader, if you like, we only try to guess which direction the market may be going today, to put it very simply. So when you arrive in front of your screens at the beginning of the day, you may want to think, hey, where's the market likely to go? Are we going to go up? Are we going to go down? And if we go up, this is where we may well be going. And if, quite the opposite, it's going down, this is where it could be going. And if it goes one way or another, what will I do? Where will I go? And if I get it wrong, when do I get out? And do I re-enter? Et cetera, et cetera. So really it's the whole decision making that process that you have to go through while you're looking to be day trading. Now, just want to explain a little bit what I use, what I look at. That's the big, very large principles here, but you're going to have, if you want to be day trading and if you want to be a little bit serious about it, I'm not sure you can get away with, certainly trading futures can get away with the broker platforms. What FX brokers tend to give for free some trading platforms because they want you to put money on there in your trading account, and so they give you the solution. The futures traders might or might not, at least they probably might not provide their own platform directly free. They might, but they will certainly tend to have partnerships with some solution and platform providers where if you've got an account, then you can have access to a system, and maybe you need to pay, but you can have a trial. And the whole idea is, you can start on a trial basis and see how it goes for you and how comfortable you are, and does that work for you or not. But anyway, what I use is very simple. I use three different systems here. The first one is the one you can see here, you're looking at here, which is Sierra Charts. I think it's a Canadian company originally. It's not as perhaps easy to use as it could be initially. It may be a little bit old-fashioned looking when you look at it, but it is very efficient. It does everything that you probably will ever need to be doing and looking at. It works. You can do very sophisticated custom studies, and it has a load of native studies already. So there's a huge community around it. It's, quite priced, cost effective. So this is what I've been using. I'm sure there are other platforms out there, but when it comes to order flow, we'll go through what this usually means that you are looking at. It has all the different components that are needed. The second part I'm looking at, and I could be trading, by the way, directly and doing that directly from Sierra Charts if I wanted to. In fact, I could do everything. I've got three different platforms that I use, and I could be doing everything that I do on the three different platforms all through Sierra Chart if I want to, if I set it up. Again, it's your choice. You can explore it and look at it. But the way I'm set up, I've got Sierra Chart for everything which is relating to, analyzing and looking at the order flow. So anything that is going to be a chart. And for the rest, I use Jigsaw Trading, which is something that I will show you, which is when it comes to my order book, the DOM, depth of market. I get a few look at news that I really don't pay that much attention to, and economic release, which I do pay attention to because they provoke market reactions and market moves. So that's something you want to understand and be aware of and be watching. So, but it's very simple. It's just the DOM is what I use to execute orders, to put my limit orders, to put my market orders, to get in and out of trades, and to look at what's happening really on the order book. I also use something called Bookmap, and Bookmap is actually looking at the order book itself, but as opposed to looking at, buy and sell column and some market orders and lots of flashing numbers, it's shown in a graphical manner. So if you look at an order book, which is a Jigsaw order book, which is what I use here, you can see all the resting orders or limit orders, all the buyers on the side and the sellers on the other side, and the different price levels and the market orders lifting the offer, and all the buyers and sellers market orders and on the sides here. But it's very quiet now. It's early in the days for the euro dollar. It's not much is happening at the moment, but it can become quite hectic and not necessarily very visual. So I like to use Bookmap. Again, I don't have any program incentives or paid promotions in there. This is just what I use, and you can choose to use the same things or not. But this is the same thing that we're looking at here, i.e. the order book, but in a more, I'm just trying to update it as I'm recording this, but in a more graphical way. So we're looking at the same thing here. We still have the same order book as I was showing you here, looking exactly the same thing, but its limit order, its resting order level is highlighted by different colors. You can define this and however you want it and fine tune it, but the point behind this is that the higher the amount of contracts in each limit order levels here, the darker will the color be. So red, as you can see here, shows 151 contracts resting at 103 to 24. um, and so on. And when it's yellows around, it's something that you really program and define, but you can do it whichever you want. And you can fine tune it and decide to see absolutely everything, as is the case here. See all levels, or just see levels above a certain level, or just really the larger levels that you think are meaningful to the actual order flow. So that's visual for me. I could trade as well from here. I could do some basic order flow as well, like charts and footprints and so on from here. I don't do it from here. I could also do that from Jigsaw, which I showed you earlier. But I've chosen to have 3 different platforms because I'm used to them. They all can do very specific things, and they're really good at doing specific things in their own right ways, which is, effectively what I use 3 different platforms. But bear in mind, really the most complete one will be Sierra Chart, and you can do all of that, including the visual order book representation. You can do a lot of the charting as well on Jigsaw Trading, whose order book. It does more than just order book, but this is what I'm showing you here. And of course, you could in Bookmap as well look at different, part of the order flow and charts that you're looking at. So really here, I'm just showing you one of the 3 screens which I have. But what we're looking at here is different charts. They're all custom charts, so you could get there, build it yourself. I've got different levels which I project. So it's past levels, all the footprints that the different transactions between buyers and sellers have left in the past, and I project that into the future as they remain point of interest. And those point of interest are likely to be revisited at some point, and when the market goes back to those points, will be attracted to some of those points like a magnet, as well as some level in the order book with larger liquidity, for example. So all of that act as magnet and point of interest and of value in the market, really. So I'll go into details of what I actually look at here, but you can see there are 6 different charts. I've got another screen really where I have the Jigsaw order book, which I've just showed you with a daily presentation of this volume profile and market profile chart, and with some news and economic release. So another screen, and I will share the screen so you can see them. And another one really where I look at more, it's not very relevant, but it's different representations, and you can have different, charts and different tabs here. You can create some of your tabs. You can have as many independent screens, like windows as you want within the same screen of your laptop. If you've got, of your PC, if you've got several screens. And here, for example, we're looking at all footprint, and I'll go into detail of what footprint does and is, and is actually showing you. But really, the idea here is to look at what has, and you can have as many charts as you want, as you can see. But really, the idea is to help you understand where the market could be going, where it has left lines in the sands and footprints, and understand that this will be landmarks and areas of interest for future reference. So if what I like to do is, I think one important thing that it took me a while to understand here, and it's a generic concept, is that we may be day trading, meaning, we trade during the day, and the day is defined however you define your day, but, and depending on what you trade, but obviously there are some opening and closing times of the markets in each different sort of type of market that you're trading. But really the idea is that, let's say a day for you is 7 to midnight. Let's say that for somebody else it's 9 a.m. till 10 p.m. And let's say that somebody else tends to wake up at 12 and go to bed at 2 a.m. And everybody's got different references of what a day is and time is, and this is not really important. What's really important is the market doesn't have that. The market doesn't care. The market is not. Yes, there are people, players or actors, if you like, in the market who are humans and they will have working hours. And even if they work for big institutions, they will have working hours. And there will be obviously more activity if you're in one of the main time zones, or US time zone, or European time zone, or UK time zone. But then if you're in a place where there isn't a real marketplace per se, but and these tend to be during the day, as in daylight, because people tend to work during the day. But effectively, the main point here is the market doesn't care about all of that. You don't know who's moving the market in here. I mean, if you look at this chart, for example, this is showing me all the sub-volume profile as well as a market profile side by side. So this is a month. The current month is Jan. Going back, this is Feb. This is, sorry, December last year. Going back, this is November and so on. Okay. So, and I look at this is a monthly view. I look at the same on a weekly basis, which is one of the other charts that you saw, and another one on a daily basis. They all overlap, obviously, the different areas of interest. Some of the players on the market will be daily, like us, not only daily traders, but they will have a very short time frame. Some will have much longer time frames because they may be large pension funds or asset managers, and looking at their short term, maybe 3 to 6 months. Our short term as day trader is a day, or even an hour. And some of those transactions here, we're looking, by the way, at everywhere at the euro dollar futures contract. I will only do futures contract, and I'll explain why in a minute. But the point is, we don't know who's in the market. People have different aims, different goals, they're doing this for different reasons. I'll do a session on why, might be, and the euro dollar, or all the currencies actually, futures, why, the different possible reasons why somebody may want to be trading this. But the point of it here is just that you've got a bunch of people, they're all looking at they're looking at the same things, but different perspective, different goals, different reasons, effectively. So if you're deciding that, hey, I only look at daily charts, or hourly charts, or 4-hour charts, this is purely subjective. That's your decision. And it's a way to look at the market. This is it's not necessarily relevant to what is actually happening on the market, if that makes any sense. So context here is super important. In fact, it's probably, I think, the subject of one of the previous videos which I've done. But here, more importantly, although this is a monthly representation of all the transactions, so this is a volume profile, and so the volume is not at the bottom here by time, but it's a volume at price. So each price shows you how much volume has been transacted. And you can see that depending on the price where you are, the price being here, there might be very little volume, there may be a little bit more volume, or much larger volume. And then so this is give you a profile. It is clearly vertical profile. And you can see that when you get to the top, the market probably thinks, hey, this is getting too expensive, I'm selling, and hey, this is getting too cheap, people stop trading, and the market is buying. And so in the large principle, this is sort of the logic of looking at this profile. This is the market profile. The market profile is only looking at time. So it's still vertical, it's still broken down in price level, but it just effectively says, hey, on each price level, how much time or where have you spent the most time? How much time has been spent on the most level? And it in this case, and it's not always the case, by the way, in this case, you can see the time profile, or the TPO, time price opportunity, the TPO, the market profile, as well as it's called as well, is really fitting quite well the volume profile. Okay, i.e., the point of control for the time profile is here on 103.42. The volume is slightly below it, but it's not, there's not a huge gap. It's pretty much in the same area, meaning the market spent a lot of time in the same area, the value area, which is in blue here, okay, in the volume profile. So the market, this is where the value has been assessed being the most important so far in this month, where the value has been between 104.09 and 103.05, just to make it super rough. And while the market has spent, I've generated the most volume, for example, here, this is also where it has spent the more time. So usually that indicates that, there's a lot of transactions happening because this is where the value is perceived to be for, and it's the same for all the assets, by the way. Okay, some people say, hey, can I apply this to equity futures? Can I apply it to shares or credit or fixed income or commodities or gold? Yes, that's just a functioning of any market. Okay, so it doesn't really change anything. If you're looking at Forex, obviously Forex is an OTC, over-the-counter market, i.e. it's not centralized. It doesn't have a marketplace. Doesn't have official volumes. And the volumes that you are going to see will be the volumes communicated by your broker. That's how much volume is being transacted, from their clients. So it's not a representation at all of the whole market, which is why I tend to look at futures, because futures are. And you could argue you could still, if you see a chart, look at FX data from whatever platform using, if they provide you FX data, the broker you're using, you could still be looking at the same thing, but this will only be what's relevant to your broker. You could argue that if you have a large FX broker, it's representative of the market, and probably is to some degree. But of course, to be really precise, it's not. It also will show whatever applies to that broker, and it's not relevant and a true picture of the overall market, because there isn't a true picture of the overall market, because it's an OTC market. Okay, so I just want to. It's a boring detail, but I just want to explain overall why I look at futures contract. And futures contract, as I mentioned, if you look at any, you can Google it, you've got futures contract on everything. Corn, petrol, gold, platinum, silver, currencies, indices, the S&P, the CAC, DAX, whatever you're looking at, okay? All of indices, they are future contracts on many different type of assets, okay? They're obviously the underlying, meaning what, again, this refers to what a future contract is, but it is meant to be, buying a contract now for delivery in the future, usually 3 months. So now the contract expiry is end of March for the future contract, will mean that you could just buy a future contract, a March 25 future contract expiring in March for gold, for corn, say. If you waited for delivery, you'd pay the price now for corn, and you'd have 10 tons of corn delivered in your back garden. Won't happen, but technically you could. And this is what it would do: is you're paying the price now. So if the price goes up, then you will have paid less, if you like, because you bought it at a price now. Now, while this is the actual original reason for future contracts, a lot of people using to speculate, because of course the prices go up and down, and it's just used as any other instrument. The underlying is always always was behind it. So the underlying of the futures, the euro-dollar future, as we're looking at here, is the euro-dollar spot. The spot is the actual OTC euro-dollar exchange rate
Trade 6
market.
F5 CME at rhythmic by price
So they follow each
1.03435.
other very,
Size
very, very closely. Okay,
120.0.
because it's the underlier, and the future is tracking, if you like, the underlying, whatever the underlying is. Okay, so it works for all the products where you have futures. So the point is, you could technically, and I know it's a question that does come back quite a bit, is can I look at futures contract for gold or petrol or whatever, or the euro dollar as we're doing here, and if you're talking about FX, for example, and trade euro dollar spot FX with a forex broker using that analysis? Yes, you can, because again, this will track the underlying, in this case being the euro dollar spot. Bearing in mind the euro dollar spot again is an OTC market. Sorry, and of course you didn't have an overall picture, and this just shows you the overall picture of the future market. But it's very obviously very, very closely correlated, of course. That's the whole point of it. And in fact, there are strategies where there is some kind of decorrelation which can happen in some particular time of the day, but it's something I don't really use, but does exist, and that some people use and make money from. Anyway, so here in this example on the volume profile, value, the higher value is on 103.31. We spend a little more time on 103.43. It's not too, it's fairly close, meaning a lot of transactions have been happening, between buyers and sellers at that level and in that area, and this is also where the market has spent more time on. As I mentioned, it's not always the case. Sometimes you'll have little time spent somewhere with higher volume, or vice versa, a lot of time spent somewhere with very little volume. Even if you take away any financial markets understanding behind this, you could argue and think of different reasons why one might spend doing a lot of time doing something and not actually doing very much, or why there will be little time spent on doing something and a lot is happening. So we'll go through that in more details, but really this is just to explain to you that's what we're looking at and a lot of the charts that I'm looking at. And I like to look at it on a different time frames, because specifically the market really doesn't have a time frame. A time frame is just us humans with our time, with our daylight, with our jobs, where we put time frame on things because we have to, because otherwise we'd work non-stop, right? So, and we like to sleep at night. So this is, as an example, a monthly view. Here we're looking at the same thing, but it's a weekly view, and effectively you're looking at exactly the same thing. This week, previous week, week before, and so on. Okay, so exactly the same thing. And you can see here as an example of what I was just saying to you. So far this week, it's only Thursday, but you can see that we again where we spend a lot of time here, we actually generated quite a bit of volume, but actually where we spend the most, where the most volume was generated, so it's called the point of control, which is up here, is still spend a lot of time there, but it's technically not where we spend the most time. And sometimes you'll see again areas where there's very little time spent in volume, and sometimes a lot of volume and very little time spent, which means that there's a rush, obviously, to exchange contracts for whatever reason. It could be news, it could be something else, or sometimes it's all thin on each part and they match. And anyway, we'll go through that, but just to say that here I'm looking at the same view, exactly the same thing on a weekly basis, and then here we've got exactly the same again. That's for the that's not a 24 session, because the currency future, certainly the euro dollar currency future, has a almost 24 hour, give or take, session. This is just taking the UK hours here, for example. So we're still looking at the same thing, but on a daily basis daily basis here. So volume profile, market profile for today, yesterday, Tuesday, Wednesday, Monday, and so on. All right. We've got different things which I like to project, and this is more technical, so we'll get into the technical bits and pieces at a later stage in the video, but this is pretty much a large part of this is going to be looking at the volume, and so that's the map, if you like. That's looking at Google Map to give an equivalent. I think we are going to go up there, and if we go up there, how are we going to go up there? And if we go up there, what's the best route? But if in the end we don't go up there, if we go down here, I'm just giving you a random example to illustrate my point here. Where and how and are we going to do that there? And if I'm decided to go up there, but it's going down there, what do I do? And vice versa. So, this is a whole mechanism of things that you're looking at. And here I've got three other charts, and again, they're relevant. I'll go through it. The lines, etc., are something called Murray math, which is, something else all over again. But really, the idea here is we're looking at, different time sessions. Is daily. This is 30 minutes, and this is 15 minutes. And really, if I look at 30 minutes here, I'm just looking at what the market is doing. So there are 30 minutes bars. And again, is it better to look at 30 minutes or 5 minutes or 10 minutes or an hour? It doesn't matter really, because the market doesn't care about what you are looking at in terms of time frame. The market does whatever it has to do, with hundreds and thousands of people looking at different things and doing interacting with the market here in that example for completely different reasons than you. So if you only look at your reasons, then it's likely that you will miss part of the reason. This is why I like to look at different time frame. I'll go through that as well. This is probably not the most important part, those three, but it's something I'm used to looking at here. Other thing I look at is a footprint. A footprint is effectively looking at it's a time frame here, which I randomly have chosen is 5 minutes. It could be anything. It doesn't really matter, quite frankly. I've got some stats here at the bottom of the screen: volume, delta, session delta, duration, daily range. Look into the details of it. But effectively, it's just showing you how many contracts have been transacted on the buy and the sell side in each bar. In this case, it's a 5 minutes bar in the last 5 minutes. So what's actually been transacted? The way to look at it is diagonal, by the way. It's not across the lines. It's 6 by 5, 8 by 6, 13 by 18, 4 by 41, 18 by 91. So of course, this is not, if you have 58 buyers on the side, it doesn't mean that it's 58 buyers against 91 sellers. Obviously, it's zero-sum game. 58 buyers have bought from 58 sellers, and there's no way around this. Okay, the 91 sellers are going to be 91 sellers who sold to 91 other buyers. So they're not here meant to be matching. Okay, but it's just to show that, because you've got a bid and an ask, and this is what you see on the order book. You're just showing you here the relationship of what's happening here. Okay, so you've got the bid and the ask, you've got the buyers and the sellers, and if there's a 1 and a 10 here, they're not related to one another. It's just showing you market orders. So this is what you see here. You don't see those limit orders here. You see the market orders on a diagonal bid ask way, and it's just really showing the market orders by definition are the aggressive orders, or it's a little bit more complex than that. But if I want to place a trade on my order book now, I just click market order now, and I will generate a market order and this is pretty much, I'm just trying to do it actually, but for whatever reason it hasn't kicked off. But anyway, the point is, this is an order. I hit the market button now, and I generate an order. I'll show that more of the details of the functioning of the order book, looking at other screens and looking at that side of things in the next video. But really, all you need to remember is the analysis of market orders and who. There's never more buyers than sellers. That just doesn't exist. They're not diagonally matching. There's always a counterparty in another side matching the same number, as you see everywhere. But the point is just showing aggressiveness. So if you see larger orders on one side and another, does that make the market go up or down? Normally it should, because they're more aggressive, and it's consuming more limit orders as on the order book, because they're coming and effectively consuming the liquidity, which is brought by the limit orders on the order book. But we'll go into details of that. Otherwise, it become a little bit more complex, so to speak, straight away. Now, this is it in the big lines. That's the you can have. There's a load more details on everything, of course, but really order book, liquidity analysis, looking at resting orders, limit orders versus market orders, aggressiveness, of the market orders through the footprints, volume profile and market profile. This is pretty much a news, economic news, and general news, of course, is big news that's going to move the market. But it's pretty much what you may want to be looking in order flow. Yes, there will be some little things additional that we all like to look at and think that it doesn't work too badly, and some simple things work, by the way, which I'll try to share throughout the course of those videos. And I'm trying not to make this too long. It's already 37 minutes. But anyway, just give you a first video, a sense of what is being looked at, what's being used, and why and how, and give you a sense of what we're looking at here. I'll show the next ones how to create a scenario, how to do a plan, how to project things with market, what's the reasoning and thinking and way to do things. But hope that this makes sense. Please don't hesitate if you have any questions. Don't hesitate to subscribe. Don't hesitate to comment. I mean, it's all here to share. It's not meant to be, a unique, again, solution to anything or anyone, but just a sharing what I do. And great if you like it. But don't hesitate. I'll see you in the next session.